you're having a great time. This is Devam. You know, the only problem is I'm older than him, or else I'd like to be
Not by much.
like him or him. So Devam is 33. He comes from a middle class family. A lot of you who have asked questions today are like 21, 24, and there are some older ones whose kids will be 21, right? 18, 21. So Devam comes from a middle class family, not a lower middle class, slightly high middle class, because his father was also an IIT engineer. Devam himself is an IIT engineer from IIT Roorkee, and then he did management from IIM Ahmedabad, right? So he's a top achiever, and he's 33, which means that if you are 21, and if you want to be where he is, you better listen to him and what he did, right? And Devam was also famously at Flipkart when Flipkart launched the first big billion day. And he is slightly conventional. I've had a conversation with him in terms of investments, which is actually not very bad. He is not stingy. He likes to spend, but he also loves to invest. He has a good corpus already. I'm not asking him how much, but he has a good corpus. At 33, if you have a good corpus and you're able to spend and invest as much as you like, then you have made it in life. So how can you get to where Devam has been? Let's find out from him what he has done. So, both in terms of life, because what happens is when we invest the way we think, right? Everybody has a different investment philosophy because all of us are unique and each of us thinks differently. And we invest the way we think. I would invest at my age more in FDs probably and give away the tax than anything else.
Yeah.
You would invest differently.
Sure.
So in terms of life and investment, what would be your three biggest no compromise principles that you follow?
I think I can probably sum it down to one, right? The idea is all of us want to chase an easy life, but I think a little differently. I want to chase a fulfilling life. And I think Mr. Kedia some while ago mentioned that, look at the stock market, look at any investment as a business, not as a casino, right? And I think that's the principle that I go by and live by. If I try to chase easy money, I can get lured in by, scams. I can get lured in by some of the speculative assets, put a lot of money there. But that's what I want to avoid. I'm okay to have return of capital rather than chase a higher return on capital. I think that is the fundamental principle in my investing journey.
So tell us, when did you start investing? When did you get your first job?
So I got my first job in 2013, but then took a break for my
2013,
MBA.
that's like 11 years ago, so you'd be 22.
Yes, I was 22.
Okay, so did you start investing at 22?
No, actually I took 4 years. Between 2 years was spent on my MBA, and then I was chilling for a couple of years before I started investing. 2017 is when I started investing.
2017 is. What was your first investment?
So
who told you to invest? Tell us a little anecdote on that.
Actually, no one, and I think that really helped. I walked up to my father at that point of time, said, I'm looking to invest about 25,000 rupees. What do you think I should do? And he said, if I tell you anything, it wouldn't be worth it because then you'll always depend on someone. I don't say that you should become an expert, but become knowledgeable enough so that you don't get fooled. And that is when I started doing my research. Spent about 10-15 days learning about funds, stocks, etc., and finally put my money in an index ETF.
10-15 days is good enough to learn, is it? Many of us spend 40
I think
years.
For a person who's starting out, best to keep it simple and uncomplicated.
So tell us, from 22 to 33, in 11 years, Devam is now the business head of Lemonn, which is a stock investment app. He's practically the CEO of that business. And he's worked at McKinsey, he's worked at Flipkart and a host of other places. So in 11 years, you've really done quite a lot, right? And your investment, when you first invested, and that was in 2017, you said, 7 years ago.
Yeah.
In these 7 years, you were at Lemonn all through, these 7 years.
Yep.
So your salary has also gone up in
That's
these
true.
7 years.
That's
right?
true. Can't deny.
So all of us, when we start investing, we think that how should our investment strategy change as we grow in age and in income, right? Because as you grow older, you obviously earn more. right? So when you earn more, do you keep the same strategy? Do you change it? How do you change it? What did you do?
Actually, my strategy did not really change much, except for the fact when I got married. So
Okay.
that is when it really changed.
Your wife came and changed your strategy?
That's true. That's true. We have a lot more spending now.
Okay. What does your wife do?
She was also a consultant at McKinsey, so she's now taking a career break. But actually, that really happens to a lot of people. When you get married, that's the biggest change because two different people come with different philosophies. I think I really sort of opened up to spending a lot more when she came in my life, and I think I would say I'm happier. So
Right. So, you know, at your age or even lower in the last 7 years, you are typically the kind of profile, highly successful, IIT, IIM, doing a great job.
between middle class and highly successful, I would say only one thing is correct, and
No.
there's a long way to go.
You're being modest. But, what is your thinking in terms of portfolio distribution? This is the kind of age where if I were at your age and I'm like IIT, IIM and doing a good job and getting good money, I would really put in a lot of money in risky assets and say, boss, I have got time on my side. You know, if they don't work out also, it's fine. You know, I can always invest more in debt assets or in, less risky assets later on in life. But what is your portfolio distribution and how has that changed? And do you plan to change it further? Obviously, you're going to earn much more as you go on.
Hopefully. Thank you. So I think in my portfolio, I have made a significant shift from mutual funds to individual stocks. Probably 70%, 75% of my portfolio is in stocks at this point of time. About 15 to 20% I have still kept on in mutual funds. Rest 10% is what I call thrill money. But that's only started when, I have had a significant corpus, almost maybe equal to my 1 year of CTC. That's when it started. And that's where I like to keep it at. It's not speculative, but it's maybe, highly risky bets. More than time, I believe I have the conviction in those so that I'm backing those 10%. Yes, I do want to own a house. So that is what will change in the next few years, hopefully.
Oh, you haven't bought a house yet?
Not
You're
yet.
waiting for the 10 crore house to land?
No,
bigger.
I'm waiting for some of the cool down that's happening in the equity markets to follow on to real estate, maybe.
So are you buying now? Markets have been falling.
Yes, that's something we follow. Great you asked. Have a little bit of dry powder always because, I can't time the market. And even if I could, I would have to have a lot of conviction. So whenever the market falls a little bit, I try and buy.
So we had this great session with Nilesh Shah and Ashish and all the others, Sandeep Tandon, and they were of the view that one should be greedy now because the market has corrected 10%. So are you getting greedy?
Not really. I think I don't look at it as greed. It's just maybe allocation sort of balance. Greed is when I would, start chasing something that I don't understand. So best to stick to what I understand.
Right. So you said you invest about 10% in thrill
Yeah.
as assets, right? So thrill assets can, backfire as well. How has the experience been for you? Have they yielded good returns?
They have financially because I've stuck with them through cycle. But I wouldn't say emotionally they have been the best. Emotionally, returns may not be right. It's been a roller coaster, which is why I've also thinned down on my thrill money. It was a little higher, both in absolute and percentage terms. I'm just trying to limit my exposure there.
So you said 70 to 75% of your investments are in stocks, right? Direct stock buying.
That's correct.
What's your philosophy there? How do you decide what to buy and what to not buy?
Mostly large cap companies or, mid cap companies with themes that, some of the stalwarts have talked about. Try and look at themes. I like to think that I'm an aware person. I may not be. So maybe reading the newspapers, talking to a few experts, I think that's what guides my individual stock picking.
Wonderful. You don't believe in fire, you told me.
Yes, that's correct. That's correct because I know जब हम सब छोटे थे बचपन में थे किसी ने ये नहीं सोचा था कि मैं 10 साल slog off करके retirement ले लूंगा. All of us wanted to do well, become astronauts, become pilots, become lawyers, become engineers, right? Or maybe even the CEO. But nobody thought कि मैं 10 साल बाद कहीं जाके आराम से and I'll relax. And there's a very interesting thing, right? If you want to do fire, you probably have enough corpus. What corpus can exceed, a lottery winner. But the most depressed people are typically lottery winners after they've spent all the lottery money. So keep yourself occupied. Don't chase an easy life. Chase a fulfilling life.
Right. We have another session on fire coming up later in the day, but that is, of course, somebody who has retired and is still pursuing a productive kind of life. So, in your view, your retirement is, of course, is very far away at this point. But what would be a good corpus to have, not in terms of the amount of money specifically, but in terms of a formula? Is there a formula that you have that you follow? Is there something set in your mind that, okay, when I'm 58, I'm 60, this is the kind of money that I am looking to have?
So I think of this as as any other person would, and take the advice of experts. Probably the rule that they follow is you should have 4% withdrawal every year. So which means your annual expenses into 25. I think of this as maybe 35 to 40 because they can be outsized events which are out of your control. So somewhere around that. But again, thinking is not in that direction. Thinking is a little more traditional, and I would love to be. I think the best corpus that I can give myself is a fit and healthy life so that I can continue working, do what I enjoy, and live on.
Okay. A lot of youngsters in the crowd here. Some tips for them in terms of investments from what you have done so far.
So I would say that, every market has a healthy mix of three sets of people. Every country, every economy has investors, has advisors, has operators. And, in our sort of personal journey, we should always try and fit ourselves into one of these three at any particular point of time, but not neglect the other two, right? If you just try and become like a, 24-hour, an obsessed person about investing, you're neglecting some of the other sides to you. It's great as a professional sort of journey, but try and be an advisor, try and be an operator, try and own something. Otherwise, I think we'll be straight-jacketing ourselves into boredom and, that's not right.
Right. And just for your information, his brother is a banker. He has one brother who works at Macquarie. So it's a very successful family at this point. Do we have questions for Devam? There's one hand I can see at the back, two hands that I can see. Can we have a mic? Go over, please. You're the 21-year-old who asked a question in the morning. Yes, I remember.
Hello, sir.
Yes, please.
I know you from CoinSwitch. With bit of money in Bitcoin there and then stopped. But right now, I want to know that what is Lemon doing? Like right now, everyone 90% of people are using his Zerodha or Coin there are multiple apps right now, investing apps. So what is Lemon trying to do, or what kind of market Lemon is trying to tap? Or is Lemon trying to create its own niche or something different type of market? I just want to know that because I think it's a little bit late for investment and because a lot of challengers and other players are there in the market.
I think the thinking is bang on, and we've asked this question ourselves. The reason that we've entered stockbroking is also not zooming into maybe the last 3-4 years, but also zooming out and looking at India from a 15-20 year lens. The market size at this point of time is extremely huge. Probably, I think 6% of the investors go beyond the traditional savings banks and fixed deposits. And that number is actually going to grow multifold. So I think the market question is out of the way. On competition, I think what has happened is we should recognize that they've done a phenomenal job in the last 10 years, right? Making access easy was a great job done by them. I think the next wave will lie in discovery and decision making for the users. What we've seen on our platform, on any other platform, is that people who sort of tend to get helped in terms of discovery, decision making, or even slightly better returns tend to stick on to the platform for longer. So, I mean, disclaimer, I can't obviously speak about this because this is a public platform and we have an advertisement code of conduct. But the idea is to focus on two themes, and that is what we believe will differentiate us and any other player in the next 10 years in the stockbroking space.
Thank you, sir.
Okay, thank you for the question. There was one hand at the back, the lady there. Can you get a mic there, please? You have time for one question.
Hi.
Hello.
My name is Meenakshi. Since morning, everybody is talking about investment. Everybody is talking about, how to make money and all of that. Since this is about your journey, and Alokesh sir was talking about that, how have you grown since you started investing and all. I wanted to understand from you, how do you see hedging the risk, that we see when you're investing? How insurance plays a role in your life? I wanted to know from your perspective, as an individual, how are you seeing insurance, from hedging the life risk events that happen? So
Okay.
this is nothing to do with Lemon,
Yep.
but just your personal view.
No, fantastic
Thank you.
question. I was a little late to insurance, more than I would like to admit. I think after my investment journey began, I took about a couple of years to go there. But that, in hindsight, I would want that to be the first thing, right? Both in terms of the right age, the right protection cover, both in terms of life and health. I would say insurance is absolutely mandatory. The cover that you have depends on where you are, which stage of life, marital status, dependence, etc. And with that, I also believe that insurance as a sector, as an industry, has a really long way to go and will probably be superseding investment as well in a few years. So personal journey, yes, I was a little late. My advice is the 20s, when you start earning, is the best phase of your life to get the right life insurance and health insurance, and then just add on to it as your life state changes.
Good, great. Thank you very much.
Hello.
Thanks a lot. Sorry,
Thank
did
you.
somebody?
Hello.
You have another
Hello.
question.
Good afternoon, sir.
Good afternoon.
So, as the topic is from middle class to top achiever, so sir, how do these top achievers manage setback and failure in their life? And what should, as a middle class investor, as a retail investor, we should learn from their resilience? And sir, there are many youth, many teenagers who aspire to be future investment bankers, portfolio managers, advisor. So what kind of message you can provide from your experience that what we should learn from this top investors, top big people name as a middle class? Thank you, sir.
Thank you for that question. I think I have a very simple line to it. I've also experienced few failures during the course of this journey. Not everything has been a smooth ride. But I would say never be known by your talent, right? Because talent will run out, your luck will run out at some point of time. Your hard work and your attitude has to stick through. So, I mean, आपको हो सकता है life में failure आए एक साल, the job that you've been trying, the course that you want to get into, the returns that you're chasing may not come through. But stick with the process. It's become a little bit easier. Sorry for this controversial thought. It's become a little bit easier and more fashionable to give up and, just exercise restraint, do only what you can and not stretch yourself. I want to believe the other side. Success truly comes when you've failed, and then you've tried again. So it seems very simple, it seems very easy, but that is what it is, right? When you are in a tough situation, you have to grind it out. And that's what I advise everyone else as well.
All right. Thank you very much, Devam Sardana, for joining us here today.
Thank you.
Thank you all for your questions.
I have a question. Hi, I'm here. Since
the back.
morning, we are hearing two different thoughts regarding how to deal with volatility.
Yeah.
Someone was saying that,
Yeah.
You should be in the market. You should not try to time the market. Then we also have some thought that the market is volatile. So let's wait it out. So what do you think is the right way to deal with a volatile situation?
I think I'll speak of this as an industry guy also and as a user. As a user, I feel that, if volatility is giving you sleepless nights, then you've got something wrong in your portfolio. Either you are looking to make too much money in the short term, or the losses are something that are worrying you and you don't have the enough time horizon for the next, let's say, to ride out the cycle of 3, 4, 5 or 7 years. So those two things can happen. And if that's happening to you or anyone else, I would suggest taking a correction. I think as an industry person, what I truly believe is knowledge is the asset that trumps everything. if you think that this is volatility that is going to persist or this pullback is going to continue, you're intelligent enough, you're experienced enough, and you can back it. So go for it. Take a little bit of an exit or double down if you feel that the market is going to go up. But remember one thing, only those who have the ability to bear the consequences have the right to take a decision. So if you're taking a decision, be aware that there might be consequences.